The Bank of England is due to announce its latest rate decision at 12 p.m. London time later today, in a meeting that some traders think could provide markets with a surprise cut to 3.75%, with rate bet probabilities putting the chances of a policy loosening at just under a third. This in the final rate decision before the Chancellor, Rachel Reeves, is due to present her budget on November 26th, where traders will finally get confirmation of the size of the fiscal hole that she needs to fill. It's for that precise reason that some lenders expect the MPC to wait and see what Reeves pulls out of her red box. Deutsche Bank says the option value to wait may be slightly higher, while Nomura reckons the Bank of England will cut and that the governor, Andrew Bailey himself, will be one of those to vote for a cut. Ritika is joining us in the studio with more. No doubt that the debate is very active at this stage when you think about what the Bank of England is going to do. Give us a little bit more color in terms of where we are in terms of the expectations and what the recent data is actually pointing to.
Yes, Sylvia, this Bank of England decision certainly got more interesting over the last couple of months. And it's expected to be a tight vote, with Andrew Bailey actually being that decisive or swing voter. Now, while the market expects the Bank of England to keep interest rates on hold at 4%, there are growing calls for a rate cut there. The likes of Nomura, Barclays and Goldman Sachs, as you outlined in the intro, they're calling for a 25 basis point cut to 3.75%. And they are pointing to the economic data as the tipping point here, this softer data that we have really seen since September. If you think about inflation, it's still at 3.8%, so nearly double the Bank of England's 2% target. But if you look at some of the areas, it's still undershot expectations, particularly when it comes to services inflation, wage growth and food price all being lower. Then you also have the labour market, on the other hand, the variable that the Bank of England watches, and that's been underperforming relative to expectations. We've seen higher unemployment there as well. So that all makes the case for a rate cut. But on the other hand, we're still going to get quite a bit of data between November and December. It'll be another couple of inflation readings, PMI data, GDP. So, and of course, that big autumn budget, the big elephant in the room. So that could actually make the case for just a wait and see approach for the Bank of England to decide their next move. But if it does skip November, what they're saying is that December then will certainly be in play for a rate cut, with markets currently assigning 2/3 of a chance of a rate cut for that month.
We can't forget as well about what else has happened this week. And we started the week with this huge expectation. We're going to get some detail from Rachel Reeves. Ultimately, her speech, all it did was confirming that tax rises are coming, and that we already knew ultimately. But how is that speech feeding into the narrative going into today's BOE meeting?
Yeah, you're right there that we seem to have, it seems to be pretty well documented at this point, or set for us, that we are going to get tax rises. That's what we are taking away from Chancellor Rachel Reeves' speech today. And also at the same time, maybe we get a cut to VAT on energy bills, where she tries to ease that cost of living. So those two elements, those should be disinflationary for the economy, and also those tax rising having the effect of further squeezing the economy. That, of course, makes the case for a rate cut. But then, as you mentioned, then maybe the Bank of England wants to wait and see for these policies. They actually, in their forecast that they outlined today, they may end up being redundant very quickly, given that they don't take the budget into account until it actually happens. Even though, as we said, it's pretty much well publicized what they're likely to do. So that's something that it could change very quickly, Sylvia.
Yeah, there's all of these assumptions are under no policy change, but we know that the policy is going to change.